Prabhat Awasthi, head of equity research with Nomura India, joins us. Prabhat, everyone is of the view that we should take yesterday's interim budget with a pinch of salt, as there is no credibility to those numbers and the assumptions are too optimistic. But somewhere do you think we should give the finance minister his due? The same naysayers did not believe his FY14 assumptions also, but he's managed to keep the fiscal deficit under check.
Well, so I think there are two things here, Nikunj. One is that whether this budget is significant in the view of the fact there will be another budget later on, right? So the fact is that last year's budget was important because that was a budget that was going to be played out given the fact that government was in power for that much. That there will be another budget which will come up in about 3-4 months' time, in July, somewhere in July, etc., means that the significance of the budget is only limited to the period in which it is operating. That is the first point. Therefore, maybe the market is not that either, is not really that bothered to sort of look at the numbers and debate it that much. The second point about last year's budget is, yes, they did meet fiscal deficit targets, but the inherent assumptions on growth, etc., did not come to pass. So you have to appreciate the fact that revenue targets were not met, and the budget essentially was balanced by cutting expenditure. And that has implications, because the implications on growth, if you don't expend that much, then the growth comes off. So the fact is that while you might meet fiscal deficit targets, but the implications on other macroeconomic variables tend to be very, very different compared to when you don't meet your revenue targets and you have to make do with the capital expenditure cuts or the expenditure cuts. So I would guess that the fact that on a big base, which has number of one-offs, you're essentially asking for a huge growth in revenues. Given the sort of economy we are in, it does look that revenue numbers are optimistic, and the fact that so therefore, if the budget numbers have to be achieved, the expenditure has to be controlled even more. So if you hold the red line on fiscal, then your expenditure might have to be lower than what it's projected to be, which has implications in the economy. But as I said, frankly, it matters only to the extent that this budget will be operating only for a very short while.
Prabhat, just by the way, we have an exclusive chat with the finance minister himself coming up in the next 25 minutes, 10:30 a.m. sharp. Do tune into that. But if you had to question him yourself, as the outgoing finance minister, what are the two key things that you would want to ask him in terms of the economy? Because there's a lot of criticism after yesterday's budget saying that, yet again, it's an ambitious task. All the price cuts or excise duty cuts are fine, but they're all going to come in at a cost.
Well, I don't know whether excise duty cuts are that big, frankly, first of all, so I'm not really that fussed about it. I mean, I think there's clearly, the industries have made representations in terms of their own growth and the kind of suffering they're going through. And on an overall basis, actually, cuts are not that relevant, so I don't think I would be really fussed about those things. The question essentially is that the growth in tax revenues that is being projected, given the experience of last year, will that growth come through? And if it doesn't come through, then what's the fallback plan? Because the essential point here is again that if you're going to cut expenditure, then the economic growth comes under question, and we have very different dynamic in the economy which plays out if the government is actually curtailing expenditure. So I think is the most important question to answer. Now the fact is that if the budget has set these numbers, then I think it will be very I don't think that the hypothetical question will be answered or not. I'm not very sure, but you would have to agree again that even though the fiscal targets for last year have been met, it has been at the expense of expenditure cuts, which has had clearly shown in, for example, slower growth in many industries. So I think my question is very simple. If you don't meet revenue targets, given the slow growth, where do you get the money from? Expenditure cuts or more divestment?
Okay, let's move to the market now, Prabhat. What is holding the index back? We had Rhythm Desai as well join in earlier on the show, and there was the talking point. While the stocks are moving either directions, the Nifty per se is not really doing anything, and we seem to be caught in such a tight and narrow band for the market.
Which I think is again to be expected. One, there is nothing happening globally, I guess. There have been some concerns which came up because of the growth slowdown we saw in some of the economic numbers. Apart from that, I think the fact is that Indian domestic market is waiting for the election results now, and there is, I think, still a degree of apprehension with regard to elections as to which way they'll pan out, even though there have been opinion polls, but we have seen that the volatility around election of markets has been extremely high in the last few elections. So as a result, basically we are essentially seeing investors not being active, very very active, because if you look at the market volumes, they have really come off quite a bit. So now why the market is not, so that's why market is not doing much. Now you must remember that there have been, market is at 21,000, it's done reasonably okay, given the fact that we had massive apprehensions about the state of the economy. Even 6-8 months ago, rupee was depreciating, so I think we stabilized quite well, we've come off the bottom quite well, and the fact is that there have been stocks which are mostly related to the global economy, which have done exceedingly well last year, which have reflected their fundamental shift in their outlook, like IT, for example. So I think to expect a market to move dramatically before elections from here, when there are not those many triggers in place, I think it's too much to ask. So frankly, market probably will remain range bound. Even going forward.
Prabhat, do you think IT will do well irrespective of the election risk, or IT is more like a safe haven, buy into IT before election, and then post elections, if markets come down, IT will not be spared?
I think it's very tough to say, timing-wise, frankly, and frankly, again, usually when you try to time it, it's usually the thought process in the price, because the market is smart enough to figure it out. IT, I think, for us has been a secular sort of story because of a very simple reason, that there will be the volume growth is stronger, the end markets are doing well. So the fact is that we have seen clearly, guidances have gone up, the numbers which have come through in the 1 or 2 quarters, not only because of rupee but also because of the fact that the end demand is picking up, are clearly good. Now going into elections is trickier, because if you have an outcome which market really likes and there is a lot of money which pours into India, then rupee could appreciate, and in the very short term you could have a situation when IT doesn't perform. But our call on IT is underpinned more by a fundamental demand drive, demand which essentially has picked up. So it could well be the case that you have a couple of months when IT underperforms or outperforms, as the case might be dependent on election results. But fundamentally our case is that this sector is not as expensive as it used to be when the demand conditions were good. So its valuations are not excessive. The demand cycle is picking up. Europe is starting to improve from the bottom. US is doing well. Therefore, IT is a sector which you should hold on to. Tactically, obviously, after elections, there could be volatility in sector performance.
I'm going to talk about something where the street is divided, and that is autos. The opinion for auto is split right in the middle. Those who are bulls are of the view that interest rates will come down and auto demand will come back, but the bears are of the view that auto stocks are priced to perfection and it will be a while before real demand will come back and excise duty cut will not kickstart the growth.
So I think there are fundamentally long-term demand will take. I also think that demand will remain subdued for some more time, because given the growth in the economy, given the fact that job markets are not really doing great, given the fact that fiscal constraints will force the government to continue to inconvenience the consumer through higher diesel prices, through higher electricity prices in the medium term, the prognosis for the consumer in India doesn't look very great, and I think it's been a theme for a while, and I think it will continue. Now coming to the budget provisions, what will happen, I guess, is that in the very short term, it could well be that people, and the consumer thinks that these cuts might not be in effect going forward. For example, after the new budget is presented in July, August, I think July maybe, and therefore the demand actually gets pushed demand is brought forward because, and remind you, there is fair amount of inventory in the system. So from the auto sector perspective, there could be a relief in terms of volumes, which comes through because of the fact that, consumers might take a view that this is a temporary phenomena, the duty cuts. And the second is that, there will be some negative impacts because the excise duty on the existing inventory has been paid for already. So the fact is that while you'll get relief from volumes, you might get some hit on account of excise duty reductions that have happened on the inventory which is already sitting with the dealers. But usually auto companies tend to do tend to run on volumes. So if the volume numbers pick up considerably, then I think there could be a movement in the stock prices which is upwards. But as I said right in the beginning, I think the Indian consumer is probably will remain in a slowdown mode even going forward. Even I think even after the new government comes to power. So I'm not personally in a camp that thinks that I think that the volumes will remain slow. Maybe 1 year, maybe 1.5 years, 2 years, and therefore a short uptick in volumes which lead